Hello everybody, Andy from ASAP Trading here. Today we're gonna have a good hard look at the Dow to gold ratio in a way that nobody ever had a look at it before. So let's get right into it. People who are able to flip gold and stocks in this point, in this point, in this point, and in this point made fortunes, and you could be easily be one of them. We are living truly historic times right now, so don't miss out on the big opportunity lying right in front of you, and watch until the end of this video to get more details on that. We are living in an era when everything is priced in dollars. The dollar is constantly losing the value because of new dollars issued, devaluing the old dollars already in circulation. This is why smart people figured out ages ago this indicator, which basically is the Dow Jones Industrial Average Index measured in points divided into the gold spot price, which is measured in dollars per ounce. The outcome is very simple. Is the stock market priced in ounces of gold, and it's running into a big flat movement. It's trading into a big range since its inception up to today's date, and this is a very fascinating chart. Zooming in on the most recent price action starting the 2000s and up to date, we can notice an accumulation pattern. Pulling out my drawings here, this is the low number 1 of the accumulation pattern, this is low number 2 of the accumulation pattern, this is lowest low, which is number 3, this is higher low, which is number 4, and the higher low, which is number 5. The accumulation pattern is defined by this red arc right here, and if the pattern was to penetrate through the arc to the upside, we were to expect big movements to the upside, but not everything is so straightforward and simple, and here is why. We are zooming right now on a daily chart of the same ratio, and we see a very fascinating phenomenon right here. Ladies and gentlemen, this is another accumulation pattern within the first big one. Here is number 1, number 2, number 3, number 4, and number 5. Number 5 looks a bit strange, but more of that in a few moments. I promise that we're gonna look at it through lenses that nobody ever looked at it before. And since this is an index divided on spot price, it doesn't contain any volume data at all. And I picked the biggest Dow ETF and the biggest gold ETF. I divided those, and I've got the volume data for you right here. Starting with a weekly chart, we have the arc right here. You can notice that we don't have the first low because we don't have enough data, but we have just enough to get some conclusions out of here. On the ASAP Smart Money, we see a distribution happening right at the end of this pattern, and I should mention that if distribution happens right at the end of the pattern, this can negate the whole structure, and the whole accumulation that happened before, it's not relevant at all. On the ASAP MACD, we can notice a divergence here between the higher highs on the price and the lower highs on the indicator, and as we were posting new higher highs, we were rolling over to the downside on the ASAP MACD. On the VIX fix indicator, we can see that we experienced a low volatility period, but the volatility is just coming in right now. This is working like sea waves. After quiet there is storm, after storm there is quiet, and so on. This was the weekly time frame. Zooming in on the daily time frame, we have the pattern right here. Pulling out my indicators, we see a big a significant distribution happening from the lowest low, which is number 3, up to today's date. And as we are speaking right now, it is turned neutral. The volatility is coming in, and the most recent price action on a daily time frame is being packed in an upwards channel. We see it right here, and the lines that I drew here mean the following. The first scenario is that we completed the low number 5, we completed the accumulation pattern, and we broke the pattern to the downside. We tested this channel and got a resumption, and we are now heading lower. The second scenario is a positive one, in which we headed lower, but we are right about to form a low which is higher than the fourth one and get it higher. Considering the big distribution happening on the daily in terms of volume, considering the low volatility on a weekly, the big distribution on a weekly, and the divergences on the ASAP MACD on a weekly, I should conclude that this level right here is crucial. 1.93 if you are watching the DIA/GLD, and an 1808 if you are watching the index to spot prices chart. If the ratio goes below this point, we might witness the biggest opportunity of our lifetime to flip the risk on assets for risk of assets. If you stop for a second, forget whatever you knew, forget whatever the media and the people around you taught you, you will realize that everybody now is on the same part of the boat. Everybody has risk on assets, tech stocks, penny stocks, junk bonds, cryptos, and so on. Nobody is thinking about getting hard assets. If you will look at the map, you will see geopolitics tensions, you will see commercial tensions, you will see a lot of pressures, you see rivalry, and tensions are good for gold. Long story short, if the ratio goes lower than this level, we are witnessing a flip into the hard assets, and this is the big opportunity for you. And if that is about to happen, the first target is right here at 1.35, and the next target is at 1.09, and this is a trade to be in, not for months but for years, not for tens or hundreds of percentages in potential profits, but for thousands. Thank you very much for watching.